Today we're going to be talking about why the very famous philosopher and trader Nicholas Taleb, he believes that Bitcoin is going to zero. And that's actually something that is quite fascinating because I really do respect this man. He actually has a lot of thoughts that actually do make sense, especially his theory about anti-fragility and how to make money in the market. So let's actually get into why he believes Bitcoin is worth absolutely zero. One of the big factors he has, he actually creates a long, complicated mathematical formula that suggests if Bitcoin at some point in time, if Bitcoin at some point in time could be worth zero because of some shock to the system, then it actually should be worth zero today. And what would be like a shock to the system that would actually cause Bitcoin to become absolutely worthless? Part of it actually is based upon the idea that something may happen to maybe all of these miners that help to validate the transactions. What happens if there's some kind of regional blackout or for whatever reason Bitcoin in the future is technology? What if something is actually better? What actually causes them to actually continue to maintain the Bitcoin system if there's something better in the future and they just say, hey, I'm going to get paid more to mine something else or to use the technology for some other purpose, maybe not even related to cryptocurrency. So nobody says that this is a high chance of happening. Even he says, oh, this is not like it's going to happen tomorrow, but there's a probability of it happening. So it's not a 0% risk that will happen at some point in the future. So the fact that it's not 0%, it means that it's possible. And maybe if you look at it on a long enough time horizon, maybe that means that it's even probable that it happens at some point in time. So there'll be a shock to the system at some point. Maybe that means that Bitcoin should be worth zero in the future. Maybe we don't know when that will be, 100 years, 50 years, next year. But then if that is the case, then the present value should be worth zero. I'm not exactly sure I necessarily agree with that. Every car on the road is going to be worth zero one day, except for the classics, but yet their present value is still what it is. The other issue he has is the volatility of Bitcoin. He says that the volatility of Bitcoin is highly problematic because it's gone anywhere from it sometimes has volatility of around almost 100%. It's gone all over the place. It's surged, it's dipped, it's crashed, it's come back. But what's funny about it is he's complaining about the volatility, but in his books he actually said volatility is a good thing. He said when things don't move at all, it actually results in things being more fragile because any sudden move will cause people to be scared. For instance, when Bitcoin did go down 50%, yeah, it is sad that it happened, but it actually wasn't as scary if the stock market went down 50%. That would cause more people to be scared because that doesn't happen very often. And that's not something you would expect to happen anytime soon. So it really has to do with the asset class. He even gave the anecdotal story about how, let's say you're always late to the party or late to every event. So if you're late to the next event, nobody's going to think that anything of it. But if you have something where things are always 100% on time, like for instance the Japanese trains, if the train is even late by like 10 seconds, people start thinking something is wrong because you don't expect that you don't expect that. So the volatility, he claims that that's a huge problem, and maybe it is in the interim. He hasn't really thought about maybe the volatility in Bitcoin ends as time goes on, and that could be an issue. The other issue he has is that Bitcoin requires significant effort as a system. It requires an enormous amount of effort to keep it going, which he says doesn't exist in other systems. As an example, gold, once you have it stored in a bank vault or somewhere privately in your home, you don't really have to think much about it. There isn't some kind of system working on the gold 24 hours a day to keep that gold operational. He says that that's a real fragility. The fact that the Bitcoin needs a system 24 hours a day working on it to validate it and make sure that everything is working. And I do agree that probably does make it a little bit more fragile. That you do wonder what would happen if it was taken offline. I'm not necessarily sure that it would mean that it's worth zero permanently, but for a period of time, yeah, nobody would probably be able to use it if the system is somehow knocked off. But what's ironic about him is that even though he criticizes Bitcoin, he did say that it is ideal to have a currency that is not related to the government. But then he said that an alternative currency could be something that's backed by a basket of assets. Like the currencies can somehow be tied to a lot of different asset classes or something that would not necessarily be tied to the government, but would not be subject to the incredible volatility that we see with Bitcoin. But that is these are interesting complaints that he has. Actually, I don't want to go that way. It is really, really important. I'm not saying that people should sell off their Bitcoin. I just think that he has an interesting point about the risks that exist, because sometimes the Bitcoin people do come off a little bit like it's a cult in a way, like to the moon, this is surging and we're all going to get rich. And yeah, there's an element of that too, but it is important to be realistic as well about the potential downfalls or the risks that maybe some of us are not always watching for at times. So that's something that's really, really important. I think that he does, the way Taleb works is he doesn't necessarily even have to be right with regard to his theories, because he has this anti-fragile belief system. What it means is, let's say he's negative on Bitcoin, he's not going to short Bitcoin. He said that would be foolish because Bitcoin could just surge and you would lose a ton of money and go bankrupt if you were to short Bitcoin. So someone like him, what he would do for a thesis like this is he would buy options to buy puts on Bitcoin, and he would buy it way out of the money puts, but I think he would have like a time horizon of around 6 months, because that's probably the best pricing. If it's a little bit more than that, you're going to pay too much of a premium. And when things are way out of the money, they tend to be pretty cheap. So he makes thousands of trades every year. He can be wrong on almost all of them. All he has to do is to be right on really just a very few of them, and then he basically hits the jackpot. And he doesn't even necessarily know exactly when or how some of these long shot bets will happen, but at some point in time they do happen. It's part of the nature of trading, that really rare, unpredictable and unforeseen risks, they exist, and eventually these things happen. Things do break down. And he brings up that Bitcoin, as much as people say that Bitcoin is infallible, it has only existed for a period of almost 10 to 13 years, something like that. So it's hard to know exactly how anti-fragile Bitcoin is. Maybe after thousands of years, I think we will definitely have a better understanding of how fragile or anti-fragile it is over time. One other thing to bring up with regard to Taleb's criticism of Bitcoin is he said it's not a hedge against inflation or market crashes. And one example of this has to do with March of 2020. It dropped dramatically with the stock market going down, but it went down way worse than the stock market. So if you're trying to hedge against the stock market collapsing and to buy Bitcoin, that's really not the right reason for buying Bitcoin, because it actually did way worse. It's a more volatile asset class. And I would say though that Bitcoin has indeed outperformed inflation though. I don't know how one can say that Bitcoin is not a hedge in the long-term sense. Maybe it's not a good hedge for a market crash. That's definitely true. But if you look at any time period, like 3 or 5 years, definitely has outperformed inflation. It's outperformed every asset class, actually. Anyway, let me know what you think in the comments below. Click the subscribe button and the like button, and I'll see you in the next video.
There you go. Hi. Hi there, little doggy. You're a cute little doggy. Look at this cute little doggy here. Here's a cute little doggy.